a lot of this newly developed infrastructure that is in the works at the moment, underwritten by a lot of this demand that might not live up to its expectations, comes onto the market. And then it'll be backfilled by the next generation of technologies, whether that's AI plus, 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 or quantum computing and other technologies that end up, needing to backfill some of that excess capacity.
On the other hand, based on what just we experienced with DeepSeek, the compute demand might double. We don't know that yet. We'll probably have a better idea in the next 3 to 6 months.
Why would it double? Why would the advent of DeepSeek double the compute demand?
Easier, faster, cheaper.
Jevons paradox. God, I feel so smart. I'd be a winner at a cocktail party.
Hello and welcome to Cool Vector Hot Takes. This is a special program where we cover the news and trends taking place in the world of digital infrastructure. I'm joined by my fellow Cool Vector editorial advisors, Nabeel Mahmood and Phil Koblence. Phil and Nabeel, how you guys doing today?
Brilliant.
It doesn't work with my accent saying I feel brilliant. So I feel fine.
But you look brilliant.
That's why I have these fake glasses on, so people think I'm smart.
There you go. And just for the record, where are you guys currently? Phil, you are in New Jersey.
I'm in Montclair, New Jersey.
Excellent.
Yeah,
How about yourself, Nabeel?
I'm back in Hawaii. That's why I'm not wearing a sweater or cardigan.
All right. So just so our viewers know, Nabeel is forming his thoughts in the paradise of Hawaii. I'm in New York, and Phil is in what might be called the Hawaii of the tri-state area, New Jersey.
Oh, no doubt.
And so I think we're going to have a great conversation. So guys, we're going to go over 4 topics today. Not surprisingly, the first topic is something called DeepSeek, which has been getting some attention. I think we should cover that. We're going to go over something from the distant past called Stargate. We're going to go over the levels of private capital fundraising, which is relevant to the build out of data centers and its overlap with the private capital industry. And finally, since this is a relatively newer podcast, Cool Vector is a relatively newer platform, we're just going to talk about why we personally are excited about this industry, why we're bullish about digital infrastructure going forward, and what about it appeals to us from an intellectual basis. Phil and Nabeel, before we get to your take on DeepSeek, I want to just get initially what your first reaction was when you saw the news, and I want to get your reaction to the reaction of essentially the general public, because let's just say that there's been a lot of discombobulation across the world for the advent of DeepSeek. And in particular, in the world of, I guess you call it digital things, digital infrastructure, you seem to have a tale of 2 extremes. You have Stargate, which we'll get to, which is a $500 billion announcement. And then not too long after that, you have DeepSeek, which I think barely cracked $6 million in spending. And yet they're sort of being spoken about in the same sentence. One is a gigantic investment spend and the other is relatively minuscule. Starting with, I guess, Phil, when you're first reading what DeepSeek is, what was your initial reaction?
Look, I grew up in New York, right? So there's no shortage of, Chinese knockoffs that you find on Canal Street. And I don't think it put Louis Vuitton out of business for the Vuitton Latons that you can get on Canal Street. My initial take was, wow, that was quick. The overarching demand that's been generated in the super mega hyperscale data center space has been a little overhyped by virtue of the fact that it's being designed to standards of, the kind of NVIDIA chipset of today, without taking into account that the way these pendulums typically swing suggests that there will be significant efficiencies as to how AI workloads are processed. And you might not need 100 or 300 kW in a single rack in order to achieve some of these things. And you're likely to find a lot of disruption, particularly as it relates to leveraging existing types of chipsets or innovation that's happening in chipsets that make things more efficient. I know a lot of people in the smart class are referring to things like Jevons paradox, where as things come down in price, they end up, spiking demand. And I think all of those things. But initially, I was like, wow, that was quick, because we just got back from PTC where everyone was talking about, the gigawatts upon gigawatts. You just heard, the Stargate, $500 billion investment with Elon Musk suggesting that, SoftBank doesn't actually have that money, and some like cute, really pick up your popcorn infighting that's happening with the tech bros. It makes total sense that you can do things cheaper. It makes total sense that there is an overreaction to the people that are surprised that exists. But I think that's exactly what it is. I saw a lot of overreaction. It happened probably quicker and more out of nowhere than I expected in terms of, kind of the market's reaction. And I'm not sure how much you can believe that it cost $6 million. I think that was the number that they threw out for kind of the model that they're talking about. But there was a lot of work that went in prior to that. But there's no doubt it's more cost effective the way they've done it. And that is the trend that all of technology has always taken since the dawn of time.
I totally concur with that. It was never a matter of if, it was always a question of when. I mean, this was going to happen. And it's not the first time it's actually happened in history. There's plenty other examples, not just necessarily in the technology sector, but other verticals and sectors around us. Something like this was going to happen at this scale, a $600 billion market cap drop overnight, or $153 high to $118 stock value. And I still believe it's going to go further down. Maybe in the next 2 months, we're looking at $50 in NVIDIA. Jensen, don't hold me to it, but if it is $50, not plenty.
Are you shorting NVIDIA? Are you shorting NVIDIA? I'm telling everyone that AI was the future.
AI is the future. But the point here really is that, what we have created is opportunity for the globe. It's really a wake-up call for what has happened with NVIDIA. There's going to be more and more applications that are going to come in to play. The ecosystem is getting much bigger than it ever has been. We've been talking about it for a long time. People have been talking about the over-design in the data center, in the compute space, and underutilization. That's going to start changing very, very rapidly here as people start realizing that there's better ways of doing things.
As an operator, and that's what I have been my entire career, you always see, like, you're in a bubble because you're operating a business, but you always see the markets overreact to any information, whether that's earnings or, some news that comes out, or, some CrowdStrike outage that was going to be the end of that company. And you see these essentially made up values for companies that shift seemingly as the wind blows.
Anything involving the public markets could be prone to overreaction because there's so many decision makers and not all of them are entirely informed. I was a little worried that I guess digital infrastructure was completely doomed. Have we been wasting our time? The news about DeepSeek really kind of got to the core of, have we built too much stuff? Have we built too much infrastructure to handle the compute necessary to get this stuff done? And if we have, then there's serious repercussions that are going to ripple across the sort of digital economy. But it did occur to me, and you guys seem to be sort of backing this up, that we don't know the extent of this story quite yet. And it's not clear what the broader implications are going to be, other than this company has been successful at being more efficient in getting to the starting line of a powerful AI platform than perhaps some other companies in their own way. My question back to both of you, what will be the implications for data centers, digital infrastructure, now that people have a slightly different view of what compute is necessary?
The way I've always felt about these sorts of things is it'll just give you more runway out of the capacity that is, under development. We're talking about, have we built too much? We haven't even started building the things that we said we committed to. This is not one of those things where you could say, I'm committing to build a 100 megawatt data center in X community, and then the next day it's up. It takes years to get that type of capacity online. So it might serve to inject some realism into the kind of timeline with which the type of capacity that's being developed is taken up. But I don't think there's anybody that's suggesting that digital infrastructure is no longer going to be relevant in the same way they were, say, in the 2000s during the dot-com bubble, or when everything was, the pendulum was swinging towards the cloud and everyone thought, co-location or on-prem infrastructure was no longer relevant.
Yeah, I would concur that. I think this is just the beginning of time. We haven't even broken ice yet. And this is a good sign to realize the fact that we've got to improve our efficiency ratios when it comes down to what we build versus what we consume. And there's going to be more and more applications. I mean, look at all of us as users, right? I mean, data resides at our fingertips, and we want it more, we want it faster, and we want it right now. So there's going to be more and more applications that are going to be deployed. There's a bunch of new layers of technology set that are going to come forth, and they're going to require, the physical layer, which is the data center. So we'll continue to see the boom in the sector, and the numbers, like Phil alluded to earlier, we haven't even started building to what we promised a year ago, or even 2 years ago.
Yeah, one thought I had is with regard to the energy required for data centers. A lot of the people behind these developments, many of them private capital firms, say that there's now inelastic demand from these investors for the energy component. In other words, it is so existential and important for these hyperscalers to have the infrastructure there that the price of the energy is almost an afterthought compared to the importance of just getting these projects built. Perhaps if there's more reality injected into the conversation, we go from sort of like crazy inelastic demand to just a regular way supply-demand imbalance. The building continues apace, but it's just perhaps at a less of a fever pitch.
I don't think there's a scenario where we don't need access to more power. The kind of sub-market that may be impacted, and I don't think it will, because I think we need to move in a direction where we have the ability as a society to enhance the infrastructure that supplies power, which is intrinsic to all verticals. It doesn't necessarily, data center is acute, but, manufacturing and all that. But if you see, you have a lot of the kind of small modular reactor companies and a lot of these companies that are building, hydrogen powered off grid, type of sites. And I think it's all amazing innovation and it's great. And the use cases are abound. I think what you'll end up finding, which I have been consistent on for the last, 2 years of trying to inject rationality into an irrational kind of hype cycle, is that you're going to end up with a lot of these sites being overbuilt. I don't think that's a surprise. I think the idea that you are building to a spec of 300 kW per cabinet feels absurd as someone that understands traditional compute workloads. The inevitable use cases for the sites are going to be some combination of AI workloads, traditional compute workloads, and some modulation of what the densities are. So the grids, after all this stuff, may have, a lot more capacity than they had maybe anticipated. That's going to be another realignment where pendulum is going to swing towards having, in 2 or 3 or 4 years, when a lot of this newly developed infrastructure that is in the works at the moment, underwritten by a lot of this demand that might not live up to its expectations, comes onto the market, and then it'll be backfilled by the next generation of technologies, whether that's AI plus or quantum computing and other technologies that end up, needing to backfill some of that excess capacity.
On the other hand, based on what just we experienced with DeepSeek, the compute demand might double. We don't know that yet. We will probably have a better idea in the next 3 to 6 months.
Why would it double? Why would the advent of DeepSeek double the compute demand?
Easier, faster, cheaper.
Jevons paradox. God, I feel so smart. I'd be a winner at a cocktail party.
Yeah, easier, cheaper, faster, right? There's somebody else potentially developing a technology that we don't know about. That could come out in the next 3 to 6 months. That could crash NVIDIA's stock value again. We might see another $600 billion.
You have something. You've definitely shorted NVIDIA. You're really excited about some potential crash in NVIDIA stock. But
yeah,
it does.
I do see something happening, Phil.
I will say that it does seem like just the sheer existence of the ability to accomplish what DeepSeek has accomplished appears to have opened up a pathway that seemed otherwise murky for AMD and Intel, particularly Intel, that seemed to have been left behind in this AI hype, and whether their chipsets are relevant to this market. It seems like DeepSeek has proven that you can do a significant amount of AI-style workloads on kind of traditional processing, which I think opens up a lot of pathways. So let's make this into like a CNBC. I need like a Jim Cramer-style sound effect bar. I think Intel, AMD, when I think NVIDIA comes back down to earth a little bit, and then we see what happens from there.
Yeah. In other words, probably we're talking about more of market stabilization with the other 2 or 3.
Always, right. I mean, I think
Qualcomm might be back in the runnings.
Right.
That's the Jim Cramer money.
Right. Sell. Buy.
We'd like to remind our viewers that nothing we say here constitutes investment advice.
For God's sakes.
Please
Please do
don't.
not take investment advice, certainly from me, because, I'm still singing for my supper every day.
One thing that occurs to me is that the story of fiber optic cable from the early 2000s, the advent of the internet age, there was a rush to build fiber optic cables across the sea. Eventually, people deduced that they had built too much, and there's sort of a financial crisis. But ultimately, that capacity was taken up. In the long term, it was the short-term financial structure was not right, and a lot of people lost a lot of money. So perhaps there could be some over exuberance going on in the data center world that might have financial implications, but ultimately that compute capacity will probably be taken up.
That's the point. The infrastructure world, whether it's fiber or data centers or all manner of digital infrastructure, is the long game. The issue with the dot-com boom was there were articles written about whether the internet is just all hype and no one's ever going to use it and it was just a fad. Clearly, we've gotten beyond that, and we recognize that digital infrastructure as a whole is the source of innovation across verticals and is here to stay. And I think anyone that wants to recognize the best ways to invest in it from a private equity or an institutional standpoint has to look at it and understand what the ramifications were for an expectation of short-term returns in the past. The companies that went, belly up, providing the very foundation for the way we communicate with one another in the boom of fiber companies that, ran alongside the railroads and ran, under the sea is certainly informative. But this is the long game. So you really have to believe in it and not expect, a 1 or a 2 year return. This is not house flipping. This is laying the foundation for, the next decades of innovation.
Yeah, and it's worth noting that, the stock market is a province of minute by minute fluctuations. And, one company comes out with an item of news and its stock swoons 40%. But in reality, the digital infrastructure world, the world of data centers, is a world of super long-term stable assets. That's why institutional investors call it infrastructure, because they expect it to behave in a predictable long-term way where you can see revenue into the future. This is the province of 30-year power purchase agreements that people agree on so that the enterprise is stabilized over decades. So you're right, Phil and Nabeel, this is definitely the long game, and getting overly distracted by a new chatbot, even if it's quite powerful, might be not seeing far enough into the future.
It's the long game. We just have to believe data centers not going anywhere, that we're going to continue to build more. There's going to be more and more data requirement. It's going to be more embedded in our lives. I mean, simple examples, like between the three of us, how many IoT devices do we have each?
Yeah, you
It's
said
a mind-boggling
fingertips.
number.
You said fingertips. It's actually
There's
goes down to the
one.
base of the finger also. So it covers multiple parts of the finger.
Yeah, there's one, Phil. Yeah, so we're going to consume what we have built very quickly here. And it's what we are talking about today. I would see, based on the run rate that we have in the past, that we will build and they will come and we will wait out 5, 10, 15 years. That time is started to shrink. So what we're building today, it's going to be fairly much so occupied within 18 months to 24 months.
A related topic that we're going to now move to is Stargate. Stargate is the name of the project announced by a group of very powerful names in the AI world. OpenAI, SoftBank, Oracle, MGC, which is an investment firm out of the UAE, ARM, which makes chips, Microsoft, and a company that Nabeel is trying to short called NVIDIA.
I am going to be getting a bloody phone call from Jensen here very soon.
Jensen, we do want you on the podcast, Jensen. So,
So the announcement was $500 billion invested in digital infrastructure over 4 years. That's a very large number. The group of investors is top shelf. What's your take on this, Phil? When you saw this news, did you think, this is a continuation of the trend towards bigger and bigger data centers, or was there something about this that made you pause and say, hold on, this is getting crazy?
I think crazy is the point. My first take was, oh, wow, another announcement for announcement's sake. The one thing we're not missing really in the broader industry is access to capital. I don't think there's a shortage of capital for these types of developments. So look, I think it makes for a great cover page, and certainly it's a boon for an administration that wants to be seen as forward-looking. I'd be remiss if I didn't say some of the infighting where, Elon is calling into question whether SoftBank actually has the $500 billion isn't entertaining. And I think the entertainment to a certain extent is the point. Do I think that it will be $500 billion on the nose? I think that the point was the announcement, less so the actual deployment, because a lot of the people that are, focused on the announcement are less concerned or aware of like the logistics involved and the technology component of it. I like digital infrastructure becoming mainstream. So to the extent that it did that, I think, sure, good, great.
Yeah, so one stance of the collaboration clearly demonstrates the trend, the convergence of artificial intelligence, cloud, semiconductor, and all the innovation that's going and the scale that it's growing at. certainly there is an element of excitement that we're trying to bring multiple sectors and subverticals together. We're all potentially trying to speak the same language. But the question is actually much bigger, and that's how do we ensure sustainability, both in terms of energy consumption and ethical development and deployment of these technology sets. So what has happened with what we were talking about earlier with DeepSeek, I mean, the market cap drop primarily was derivative because of the cost to build faster, cheaper, and the energy consumption, right? So that becomes a bigger question with this $500 billion infusion potentially as well. And then also this large AI powerhouse that this initiative ends up becoming. How do we regulate that? Who's going to be responsible for it? And who's going to govern it? I mean, that's the scary part.
Right. And I think, so I just did I was interviewed by Newsweek towards the end of the year. And one of the questions that they asked me, listen to that humble brag. Yes, I don't know if you know this, but I was interviewed by Newsweek. And one of the questions they asked me is like, what is the thing that concerns me about digital infrastructure in general and our moment in time from a technology standpoint? And it's really not the availability of capacity to support AI. It's this drive to kind of adopt at all costs. The real forest for the trees here is how companies leverage AI. Like that's where the real value is how they leverage AI both to make their businesses better, but also for the betterment of society. And if you're just going to build just to be able to deploy processors, just to say that you have all this stuff for the sake of checking that box and having artificial KPIs that allow everyone to pat themselves on the back, you're really producing an environment that could force people to put in information or create models, large language, small language, that are not in the best interest of both society and their business. There's a term of art used when managing like Salesforce for teams, where it's like garbage in, garbage out. If you feed it information without being thoughtful about it, it can exponentially make things worse a lot quicker without the ability and the guardrails to really, protect ourselves. So we really need to find a way to be thoughtful about both how AI is being developed and deployed and how businesses are really using it and what value that's creating within actual businesses, as opposed to just checking a box saying, we are AI, whatever that means.
Yeah, the first thing I noticed about the Stargate announcement was that it was an announcement expressed as a dollar amount. This is a project that is $500 billion. They could have led with the amount of wattage or something else, but it almost seems like that the consortium is sort of positioning themselves vis-a-vis other, AI mega consortiums to show that they are the alpha dogs. But yeah, to your point, it's unclear whether they actually need that $500 billion over 4 years, or if they're just saying, we've got this firepower and all others need to sort of fear us.
It's a metric that's designed as a brag. It is basically, we have this thing that we talk about on the Nomad Futures podcast all the time, which is, when a community looks at a data center development, they tend to react harshly because it's not creating the same type of, KPIs and metrics for the community that were applicable when those metrics were put in place in the 50s and the 60s. Nabeel calls it, number of bums in the seats. Whereas the economic benefit to a community from having digital infrastructure developed there, there's an entire ecosystem of innovation that comes around that. Maybe it's not the traditional type of office jobs that, a particular building created in the past, but there are new sets of economic metrics. Much of this feels the same in terms of the fact that they're just saying a big dollar amount because that's the metric with which, it's the easiest for someone to measure and say, look how great we are because of our budget that's higher than the next 26 countries combined. And look at this, monetary number that we seemingly pulled out of the air in terms of, how much we're willing to spend to be better without any concept of what that actually means.
Yeah, I mean, look at how many people are talking about that, and everyone's probably going to try to write the tale for this, right?
Of course.
I mean, if you were to talk about in megawatts and BTUs, we're all going to be bad people. Like, oh yeah, here we go again. We're building more data centers, consuming more power. But all of a sudden, it's a topic of discussion. Everyone wants to be a part of it.
By the way, if SoftBank is looking for a consultant to help them spend the $500 billion, I'm available. Just look me up on LinkedIn.
Do you guarantee your results?
I'm not just the consultant. I'm also a client. I create data constantly.
Excellent. Well, why don't we move on to an important industry that feeds into the digital infrastructure world, which is the private capital universe. Private infrastructure firms, private equity firms, private real estate firms that are all quite interested in providing capital and being part of the explosion of digital infrastructure. There were two announcements that came out recently that caught my eye with regard to activity in 2024 that I wanted to mention. On the one hand, in 2024, the value of deals done in digital infrastructure reached a record-breaking, $108.1 billion. This is according to PitchBook. At the same time, the fundraising among institutional investors for infrastructure funds was about the same as it was last year, $94.8 billion, which was about the same as it was the prior year. And Preqin sort of points out that both of those years were sort of weak compared to a high in 2022. So I think the reason why this is important is because while it seems like there's a huge amount of capital coming into the data center world, actually there could be a lot more if conditions change. The reason why fundraising has been weak in the private capital world, including in infrastructure, but also definitely in private equity, is investors have not gotten a lot of capital back in the past few years. There have not been exit events, IPOs, M&A activity that gets cash back to the investors. And so a lot of them have just tons of capital in the ground. And so they're not in a mood. And in fact, according to portfolio theory, they cannot continue allocating to infrastructure, including digital infrastructure, until we start to see more exits and IPOs and things like that. If this current year we see an uptick in M&A, an uptick in IPOs, this could send capital back to institutional investors, and we could see larger and larger war chests of capital being built up, earmarked for digital infrastructure.
The last 2 years has just been the macroeconomic headwinds, right, with higher interest rate, geopolitical uncertainty, and like you said, not really a lot of activity in the M&A. This year is going to be the defining year where we going to potentially start freeing some of those assets and some nice big fat exits for private equity and VCs. I do see a significant growth, 27, 28, 29, and not to be political here, but data centers and the physical layer is the best asset class to own or to be a part of. We just don't know how it's going to materialize over the next 6 months to a year, though.
The traditional metrics by which the public markets value companies does not necessarily play well with long-term thinking. So that's why you have a lot of companies that actually went the opposite way, right? With Blackstone taking companies private that were once public, and with a ton of companies raising a lot of private money and keeping it that way because of the burden associated with maintaining a public-facing company.
The quarterly earnings call,
right?
And,
all of that
and those
stuff
kinds
is
of requirements.
right. I mean, if you look at even Equinix, which is like the darling of the public equity markets, and I know it was hit a little bit by the DeepSeek stuff. It was like billions and billions of hamburgers sold. There were like 83 quarters of growth, 85 quarters of growth, which means that if you have one stutter step, all of a sudden you're going to pay for it in terms of market cap and valuation. And that almost stifles innovation. At the scale that you were talking about with a lot of these companies, really the only option to really monetize it is entering the public markets, because they're just too damn big for companies who are tasked with expending large amounts of capital for single tenant data center construction. It becomes really difficult to play the quarterly earnings game.
It's important for people to know how attractive, and Nabeel referenced this when he said that data centers is like the best asset class in the world. It's important that people know how attractive these things are to large institutional investors who have very long-term outlooks for their portfolios. Data centers are extremely expensive. They're a great place to park billions and billions and billions of dollars. They have predictable revenue that's contracted, decades into the future. And so for a group like, a large Canadian pension, a large Australian pension, an Asian sovereign wealth fund, if there's an opportunity to put $5 billion to work into some, professionally managed, long-term contracted data center assets, they'll just say, sure, we'll take it. Or they'll co-invest alongside a major firm like an EQT or a KKR. And that might be ultimately a lot more attractive to all parties than to take it public, which has all the downside scenarios that Phil mentioned.
The other reason why it's so attractive is because there's no single use case. It has a use case across verticals. There is no suggestion that it needs to be solely focused on an AI workload or solely focused in the financial services vertical. There is no vertical either current or not conceived of yet that doesn't have some reliance upon a digital infrastructure asset. Human beings are becoming literally data generating machines, which only, further entrench digital infrastructure in every community on the planet.
Yeah, and I just want to make a quick statement here. I was just looking at Equinix for the last 5 years. $503 to 906 is where they closed the market yesterday. So just to add to that, right? I mean, it is a midterm, long-term strategy. The compute, as we were talking about earlier, driven by this application stack, the workloads. I mean, it's continuous skyrocketing. I think one of the earlier statements I made was, we haven't even broken ice yet. This is just the beginning of time.
Final topic, and let's act like we still like each other.
Oh, we do.
Oh, yes, of course. Yeah. Since we are in the activity of talking about what's going on in digital infrastructure, let's all talk about why we're excited about the space and why we feel bullish about it. I'll go first. When I first became aware of data centers, significantly later than you two, my first impression was like, gee, this is sounds like an air-conditioned room with some computers in it. That wasn't deeply exciting to me. But the more you think about it, or the more I learned about it, became evident that it was sort of at the center of the universe of many things that are happening in the world today. It involves technology, it involves natural resources, energy, geopolitical issues, investing, capital. It all comes together in data centers. And so it's an exciting thing to talk about, because when you talk about data centers, you're talking about essentially the direction of the world. So that's what we're going to try to do on Cool Vector. I'm extremely excited to be on the same editorial team as you two guys. Can't wait to delve into more great topics with you.
What excites me most about the data infrastructure sector is that we are not just building data centers. We are shaping the foundation of the future. Every major technological leap, whether it be quantum, artificial intelligence, brain-computer interfaces, edge, metaverse, and beyond, it relies on the infrastructure we are creating today. But what really drives me is the opportunity to do it right. We have a chance to rethink efficiency, sustainability, and accessibility. The industry is moving beyond just scaling up. We are talking about self-healing, autonomous lifestyle, autonomous data centers, advanced thermal management, energy solutions that could redefine our carbon footprint and how we do compute in the future. But most importantly, it's the infrastructure, I believe, is a gateway for everything going forward.
Yeah, I mean, look, it's difficult to add to, the beautifully articulated existential words that Nabeel, with his wonderful accent, is able to do. So I'll just say ditto. When I came into this space in '96, when nobody knew really what a data center was, myself included, it was really because I was fascinated with the fact that the life that I had seen, particularly as it related to computers, which I was interested somewhat in, went from static to dynamic. There was this medium that the internet created that felt like it made the world smaller and more accessible, and it just opened up just unbelievable possibilities that I couldn't even conceive of, but knew I was super excited about. And at this point, I have not lessened my excitement for this industry at all. People don't know how unbelievably amazing it is that all of these technologies can exist and work in concert with each other, and all these applications that come out just magically work. The sky's the limit. Again, break the ice, scratch the surface, whatever metaphor you want to use. We are at the beginning of this journey. The last 30 years in this industry, to me, 29 and 3 months or whatever it's been, has been kind of a blur. But we are really just getting started. It's just made it to the front pages of the newspaper after 29 years.
Excellent. Well, Phil Koblence and Nabeel Mahmood, let's do Cool Vector hot takes again in the near future.